I'll show you if I was going to manually allocate them, then where am I going to put each of these movements into each of the columns that will come on the cash flow statement. So cash and cash equivalents, nice and easy. We always know that's going to be cash. Trade and receivables, even if you're not sure, you just step back and you say, well, what's actually sitting in that account? Trade and receivables. That's the invoices that I have issued out to customers, transactions with customers. So that movement there is going to be an adjustment against my receipts from operations. Sorry, I should just zoom in a bit to hopefully make it a little bit easier for everyone to see on the share screens. Contract assets. Think back to AASB 15. What are contract assets? Where are they coming from? What have I got sitting in there? In a sense, it's almost like the new name for your work in progress, because that's going to be the payments that you've made to your suppliers for the work that you've done where you haven't actually been able to bill it yet. So that's going to be an adjustment to what I've paid to my suppliers. Inventory, suppliers again. Other assets. Now, obviously, I've got this grouped up. So when I got here, I'd need to actually go back and see, well, what transactions are sitting there in other? And I'd find in this instance, it was the prepayments. How do I get a prepayment? Well, I've made a payment to a supplier, but I haven't put it in my expenses yet because I've put it on my balance sheet and I'll move it to my expenses later. So it's going to be an adjustment to my expenses. Current assets done. That was easy, wasn't it? Then I get into the PP&E section and I've got a movement in my PP&E. Now, because PPE comes back to depreciation, I'll come back to the split here. For the moment, I'm just going to assume all of that was acquisition, but I know in my mind they bought and sold some things, so I want to come back. Accumulated depreciation. The movement there will, if we sold some things, maybe there's some adjustment to sale, but otherwise, movement in depreciation is going to be a non-cash transaction. Right of use assets. Doesn't everyone love AASB 16? Financing, payment for leases. Then we've got our depreciation movement, and we actually put some deferred tax on this one. So let's drop that into our adjustment for income tax paid. Trade and other payables. So talked about this before, payments to suppliers, contract liabilities. Now again, think back to AASB 15, contracts with customers. Contract liabilities is generally going to be the cash I've received from my customers that's not income yet. So that's going to be an adjustment to cash received from customers. Borrowings. Went and took out a bank loan. Let's come and put that over here as a proceeds from borrowings. Go out a little bit just so I can actually not have to scroll quite so much, and then we'll come back. Payments for leasing is my movement in lease liabilities. Income tax. Let's drop that into income tax. Employee benefit. You can see where that's going to go. It almost feels reasonably easy, doesn't it? Provisions. What's sitting in my provisions? I've paid some, I've got my accrued expenses sitting there and maybe some accrued wages. So I'll drop those in. Got another movement in borrowing, so I can put that across here as my borrowing section. Lease liabilities, because we end up with current and non-current. Great fun. Deferred tax. Employee benefits. So you can see I'm just allocating each of these groups, and if I've set it up as a template, I can have them preset because they're always going to be there. Issued capital. was 30,000 and now it's gone up to 230,000. So let's drop that over as, where are we going to put that? Issued capital has gone up. So we've received money and we have issued shares. And have I perhaps not even put in a column here? So I might just need to grab myself an extra column for issue of shares and come down and put my issue of shares over there. And retained profits is my movement in equity. P&L. This is the easy bit, right? Revenue. Got money from my customers. Interest income. Put that over as interest received. Expenses, we can drop in over here as payments to suppliers, depreciation, and then we've got some income tax and we've got some dividends paid. So I'll drop that over as dividends paid. And I made some kind of a rounding adjustment as well. Now, what I've done is, you might have kind of noticed it, I put a column to check I've allocated everything correctly. And as I went down, the numbers updated to 0. Just in case I put some numbers in the wrong spot, I'd know that every movement has been allocated and not over allocated. And if I look at the bottom, I can see profit from last year is matching my equity movement, but my depreciation has not come back to 0 because the movement in my accumulated depreciation accounts is not the same as the depreciation expense. Now, I know that's going to generally occur when I've sold a motor vehicle. So I want to put a adjustment through. So I'm going to take 21,857 out of that column. I'll jump that over and put it into proceeds from disposal. And we were talking about GST before, so I might put some allowance for GST here. So should actually all be in balance now, right? Cash outflow, if I look at the start, my cash balance went up by 357,000, and I have allocated across the bottom here 357,000 of cash that I've received into each of the different categories. Great, it's in balance. Now the only next step is to say, but is it right? Does it make sense that I can say I've got acquisition of PP&E with a negative, and I've got proceeds from disposal also with a negative? Now I remember, when I was looking at the PP&E section, I needed to actually go and look back at the ledger and see, well, the asset balance has increased, but did I have some sales as well? What actually happened there? So maybe instead of just being purchases only, I might have had some proceeds from sale. Maybe got 400,000 there, and I just need to offset that. So I'm just adjusting between taking the movement and splitting it up between the columns that it belongs to. Come and have a look. Those numbers look a bit more logical now and still in balance. Looks nice. Jump over to my outputs, and all I've done is just taken those exact same numbers and just put them in order down the page from each of the different sections. I think there might be a few hidden rows there, never great. So I'll just expand that out, and you can see each of the numbers we were looking at showing up in each of the relevant sections. Well, it's all in balance. It's nice. Yay. And I can even add in the formula to do the reconciliation for me. I've taken what was my income, what were the sections in the red box, not in the green box, what were the sections in the green box, not in the red box, and get back to what was my operating figure. So there you go, see? Easy, right?